Welcome to BizTech's Startup Show. Today's show is part of our partnership with the Malaysian Business Angels Network Summit 2022. Now, our guest today is Thinesh Kumar. He's the CEO of Lapasar. Lapasar is a business-to-business wholesale platform serving over 3,000 SMEs and corporations in Malaysia. This startup focuses on FMCG goods distribution to retail clients throughout the country with its own warehousing, distribution, and financial services capabilities. Now, to tell us more, Thinesh, welcome to the show.
Thank you so much for having me, Brian.
Now, Thinesh, for a start, give us an overview of Lapasar and its journey so far.
Yeah. So before I start, just to probably you looked at old statistics, we are currently serving about 10,000 SMEs already. The small shops, yeah. So I think we grew tremendously, right, in 2022. Yeah. So the journey of Lapasar started in 2017. I started off my journey trading medical devices when I was 22. I'm 32 this year. And I ran that company out of college, right? So I was doing that part-time. And by the time I graduated, that medical device trading company already had an office, 2 employees. We got things off the ground. So I had something to jump into. I ran that company from 2012 to 2017. And I sold it off, right? We'll probably talk about it a bit more later. But so why I sold that company is I saw an opportunity running a medical device company. I was trying to get my big break, trying to get deals, trying to get into bigger, larger tenders, so on and so forth. And what I found was if you have no connections in Malaysia, it's going to be very difficult, right? But right around the same time, there was a boom with e-commerce. Around that time period, right, people are getting more and more used to Lazada, Shopee. And what I noticed was how you and I made purchases on those platforms were very, very merit-based. So we always made the best decisions for ourselves, the best price points. But this was not the same for companies, for corporations, right? So the idea was, can I create a platform like Lazada and Shopee for the corporates? That's how we started, right? And that's exactly what we did. We built an MVP. We reached out to a lot of corporate prospect clients. And we found that the response was rather good, right? They were open to this idea. I think also because of the e-commerce boom, people were very familiar with this. So we went in with this branding of Lazada for corporates, right? Went in, did a few pilot projects with very large corporations, and that became quite successful on a small scale, but we then scaled that throughout the country. So I ran that model from 2018 to 2020, being a corporate procurement platform. And then, of course, the pandemic came. And because the primary category on the platform was more office supplies, so your stationaries, your furniture, IT supplies, so on and so forth. When the pandemic came, people were not working from the office. So people are not going to buy anything for the office. So we panicked, right? Naturally, we panicked. And we said, okay, look, this is what we have, right? We have technology. We have the infrastructure. We know how to bring people online. We know how to bring businesses online. What can we do with these capabilities? We looked around the region and we found a lot of companies like ourselves were then going into digitizing retailers, small retailers, mom and pop shops, whether they're grocery stores or restaurants, right? And we decided to try. So we started that test in June 2020. We got 30 or 40 customers in the first month. So we tested it out, it worked, and we scaled that super quickly. So from June 2020 till now, we have had over 10,000 different SMEs, out of which about 60% of them are active month over month. Spending has increased, and we have grown to probably record about 300 million ringgit of revenues this year, right? So
so that's gross merchandise value, right? In terms of revenue.
So for us, it's more sales because we buy the items, we store it, and we deliver it. We're in complete control of the items and its margins. So yes, you can call it GMV, but it's traditional revenue, basically.
Okay, so no, in fact, you would call it revenue. So you actually buy the items and then sell it to them.
Yes. Our thesis behind the entire end-to-end control and the supply chain is only by doing that can we give a truly wholesome experience to the small retailers, because we have to understand their challenges, right? In the end of the day,
and share with us, what are their challenges?
yeah. So now their challenges, I'm talking about small retailers now. So the FMCG market in Malaysia is broken into two, right? One is what we call modern or organized trade. So those are your 99s, your KK Mart, your Aeons, your Tesco's, so on and so forth. Then we have general trade. These are the local neighborhood grocery stores that we're all very familiar with growing up. We all bought things there. And the restaurants, right? The eateries that are not part of a large chain. Now, these guys, the most important thing to them is inventory availability. That is the most important thing, right? So if I'm a small retailer and I do not have Maggie or Milo sitting on my shelves, I'm losing revenue that day.
That's correct.
Yeah. So now what happens to them is, because of where they sit in the supply chain, which is, so every brand has a distributor, and those distributors are mandated to go and supply to all of these guys, whether they are organized trade or unorganized trade. But what the distributors typically do is they only supply to organized trade because they are large, right? They're profitable to service. These are bigger drops in fewer places.
Right.
So what they get the small retailers to do is go and buy from the large guys. So a small retailer, if you have been to Mydin or NSK or Tesco, would bring those large trolleys and buy the cartons, go back to their shops and sell it, right? Now, the problem with that is you can never predict, if I walk into those wholesalers today, am I going to get my items in the first place? That's number one.
And also there's logistics issues around that as well, because you've got to physically go and replenish stock rather than somebody supplying you.
You're right. So that's another. But also on top of that, price is very, very unpredictable, right? So it's demand and supply, especially with supply chain issues that's ongoing right now. What you'll find is, if there's no supply, which is quite a big issue today as we speak, the price rises, right? And this changes daily, every day. So that kind of that inability to predict is also a big issue to them. Yeah.
So essentially, then you solve a major problem by being a distributor through these smaller shops.
Absolutely. So what we do is we're very clear with our offering. We are not here to disrupt existing distributors. We are not here to disrupt anything. I don't use the word disrupt usually. I make it better for the small retailers. And what we do is we go to them and we tell them, look, this is our app. You don't need to walk out and buy, just buy through the app. And what we're going to do is we have 700 of your top selling items. So we only focus on top selling items that actually generates that revenue for them. And we tell them, buy anything. We're multi-brand. You don't need to deal with multiple distributors or wholesalers. Buy everything here and buy it in small values, 400 to 600 ringgit. That's up to you. And we will deliver it within 48 hours for free. Essentially what that does is it saves them a lot of hassle, number one, but also maintains their cash flow, just in time ordering. Yeah.
Absolutely, because I think a lot of small retailers, that's a big issue. How many of us have gone to a small retailer and look at the use by date, and it's been sitting on the shelves for a while?
Yeah, exactly.
So that's a very clear value proposition on your part. How do you manage the logistics and the cost associated with the logistics of supplying all these small mom and pop shops?
So I think that's an extremely important question. One, all stakeholders ask us all the time, right? Especially investors and whatnot. Okay, so there's a clear trade-off. What I learned in my journey is a clear strategy has a clear trade-off associated. So the large distributors build their scale using big customers. So I'm supplying to large guys, right? The chain stores and all that. And usually their drop points are very little. Any large distributor that's doing 1 or 2 billion ringgit a year has about 2,000 to 3,000 distribution points at any one point directly. Now, what we decided to do is we are not going to do that. We are going to pay a little higher on logistics, slightly more than them, but we are going to build 20,000 distribution points, for instance, making us the largest FMCG distribution network, right? So that's our strategy. The trade-off is cost. Now, how we keep that at a minimum is similar to how we serve small businesses in the FMCG space. We are also sort of giving opportunities to smaller lorry drivers in this space. So what we do is we go to owner operator of lorries who own, say, 1 or 2 trucks. They are constantly in and out of jobs. I don't know if I'm going to have a job next month. We give them contracts, right? We give them 3-6 months contracts, and we tell them you only work for us and nobody else. And we're going to give you 12 drops per day, right? 26 days a month. And this is your fixed income. We give them fixed income, which is viable for them. And on top of that, if we ask you to do more, we'll pay you more per drop, right? So these are the kind of guys we work with. And because we were able to cap that at a flat rate throughout the country, what happens is with scale, as we are growing month over month, the spend on logistics in terms of percentage goes down steadily. So that's where...
Yeah, your unit economics will definitely improve, because basically you have the base of the trucks and the drivers, and all you do is you pay them extra on top of that because your fixed costs are already covered.
Exactly. So that's the exact word that we focus on as well, right? Unit economics, and logistics is one of our largest spend, and we have been effectively reducing that. However, we will never be as low as the distributors because we do not focus on large drops, right? But that's the trade-off we are willing to make.
300 million is a large enough business that you can now go back to your principals and ask for better prices. Is that happening now already? And will that then improve your unit economics?
I think you're asking really interesting questions. Have you been in the industry, Brian? These are very, very important questions. Yes. So that's one of our biggest struggle today, right? We are going to the brands with only one narrative. We are serving people that your distributors do not want to serve and will never serve over the long run. Now, when we started off telling this story, we were very small, extremely small. We are still small, but extremely small compared to now, right? So then what they said was, okay, you prove traction. I want a lot more stores, right? So now when we go back, brands themselves are tiered. There are the top tier brands. I do not want to mention names. And then there's the second tier and the third tier.
Yes.
The top tier is the last that we are going to go in for, right? So what we have started doing is the local brands, the third tier brands, the second tier brands that are really hungry for distribution points, that are really wanting more shops to carry their items. Those guys are already giving us tremendous support. Now, the top tier guys, they know for a fact we need them more than they need us at this point. The shops still need them more than they need them. So there is an inflection point at which we can go back and get those better rebates and deals. We believe that's about 20,000 stores is where the switch will start happening. Yeah.
I've actually done a little bit of homework in terms of this industry to prepare for this interview as well, and wanted to see what the key drivers were. The other key driver is technology.
Yes.
Tell us a little bit about your technology and how you've evolved it as you've evolved the business.
Yeah. So when we started the corporate business, right, Brian, we took a very different approach. That business, we couldn't get it off the ground without the technology. We just couldn't, right? Because our promise to the large corporates were, I'll give you a platform for you to come and buy things as simple as you're buying on Lazada, and I'll bring in all the vendors you need and I'll earn a commission out of it, right? That was the model. So we needed to launch an MVP, and it was a painful process because we and all of the founders in the beginning days were not tech co-founders. Those came later in the journey, right? So we didn't know what we were doing, and we had to launch something. So we partnered up and we launched an MVP, and we got the corporates to test it, and thank God it was good enough, right? And we built it on very, very basic stack, PHP, which is quite widely used, and we launched it that way. And then we sort of went through the improvement process. Now, one of the things we learned there is we built so many things in the technology as features or requests that ended up not being used. And one of the most important lessons that we learned during that period of time is don't build things that we assume people will use. Ask them, ask the stakeholders, right? Such a simple thing when you think about it, but yet a lot of us get that wrong, right? And I got that wrong, definitely. Now, when we started the wholesale division in June 2020, we told ourselves technology is important to scale, but not the most important to get it off the ground. So how we started the journey was we sent out ourselves. We went out with receipt books. We really went back to basics, right? We took receipt books, we got our prices, and we wrote down orders. That's how we started. in June 2020, only because we understood that this industry, the most important thing is the fundamentals. So am I going to get it at the right price? Am I going to be able to deliver it to you on time and give you that consistency in pricing and stock availability? Now, once we got that right is when we started building tech. So we understood very quickly this is a mobile play. It's not a website play. People are not sitting in front of their computers in the retail shops. And they were already super well versed with things like TikTok, Facebook, Instagram, WhatsApp, super well versed, right? They are ready. And a lot of them bought on Lazada and Shopee. They are ready for that. So we went mobile and we built it on Flutter, which is a Google framework. And we launched a very simple product, buying, checkout. That's it, right? We launched there and then we sort of built on that. So the technology journey was very, very slow in that terms, but we built what people would use, right? So I'll give you an example. We evolved from just order now into, we have loyalty points. So we track what they buy and we give them loyalty points, and they can do credit application via the app itself. Which is fantastic. It is a 5 minutes process, 1 hour approval, never has been done in the industry. And we will continuously evolve that way, right?
So how do you provide them with credit? Is there a back-to-back credit facility that you have with someone else? Or is it a buy now, pay later type thing? Or how are you providing the credit?
Typically, the industry is buy now, pay later, right? I mean, B2B trade, it's I buy now, I'll pay later, right? 30 days. It's not new to the B2B industry. So how we did it is exactly the same. We did not have a back-to-back facility when we started, partly because potential partners wanted to see what's the risk profile of this industry. And looking at small retailers, it's risky, right? So we decided to do it ourselves first. And then we build that feature up. We build our own credit evaluation criteria, and we had results to match that against, right? Who is paying, who is not. So we did that for about 6 months. We brought it out to potential partners like banks, P2P players, and so on. We are working on a few partnerships right now to scale that beyond our capability, because we don't have enough cash flow to do that, right?
Yes, of course. It could take a lot of your funding window out of that.
Yeah. Plus, we don't want to be selling equity to finance people. Doesn't make sense. So that's the route we took, and we have not secured any long-term partnerships as of now, but we're super close to it with quite a large bank locally. Yeah.
So Thinesh, you're Malaysia focused. What are your future plans for Lapasar? I think one of the things that I recall from just a few minutes ago that you said that your critical point of inflection is 20,000 mom and pop shops, and you are halfway there.
Yep.
When do you think you'll achieve that 20,000?
So just to get that clear, right, Brian, we're not halfway there in the sense I have 10,000 customers, but I want to get to 20,000 active stores, right? So right now I've got about 5,000 to 6,000 active stores. I want to increase the number of customers I have. I want to get 20,000 active stores. Now, once we hit that, right, what that would mean is I am profitable. We are projecting profitability by Q4 next year. So against all odds, people told us we can never turn this business a profit. People in the region are burning a lot of money, but what they don't understand is they're burning money because you give them a lot of money, right? Malaysian companies don't have the luxury of raising 100 million ringgit to burn. So therefore, we have to build things in a way that can turn a profit. So we're projecting that next year. Now, in terms of expansion out of the country, Brian, we are very, very clear with that as well. It needs to be opportunistic. And let me explain that, right? When we started in Malaysia, we had to burn money because we didn't get support from any brands. Nestle or Coca-Cola or FNN items that we bought from distributors or wholesalers were bought at a very high price because we're nobodies, right? Now we have built scale. We are getting better prices. When I say opportunistic, I need to form a partnership with a brand that tells me, hey, you have done a fantastic job expanding my GT or my general trade market here in Malaysia. Could you go to Cambodia? Could you go to Myanmar? But I'll support you this time. I'll right off the bat, I will give you these prices that allows you to earn these margins, and therefore you could do it in a profitable manner from day one. Right? And that's important. And that's how we want to take regional expansion, not by taking money, raising money, going into those countries and fighting with incumbents baselessly, right? That only means I'm burning, and the burn will never stop.
I want to now focus on you a little bit.
Yep.
And really lessons from your entrepreneurial journey. You had an exit before you started a company, and then you merged it together with another company, and then you had a small exit as well. Tell us about that and how it shaped you in your entrepreneurial journey.
Yeah. Okay. So when the why I started a business was because, and this is one story that I've never put out there before. So I'm going to talk about it for the first time today. I was supposed to go to the UK on my third year of my bachelor's, and my dad struck a deal with me. He said, I'm going to have to spend 80,000 ringgit to lodge and to provide for you in that 1 year for your third year. Instead, I'll give you 10,000 ringgit, start a business here, right? So essentially what happened was he got to keep me here, not spend the 80,000. I was in PTPTN, right? So I'm going to have to pay for the loan anyways. So he saved a lot of money doing that. So he gave me the 10,000 bucks, which of course I didn't know what to do with. But that's how I started my journey trading medical devices. And then of course, because I had that opportunity, so I could buy and sell, right? And then of course I ran out of that money, and I remembered I come from Kemaman, a very small town in Terengganu, and in that entire town everybody was in oil and gas, but there was this one guy, one outlier, who left his oil and gas job and started his own company. I was probably about 7 or 8 years old, and I heard at that age that he got an investment to grow this company. So many years later, when I ran out of that money, I wanted to do this. And I thought to myself, I could raise an investment. There is such a thing called investment. So I looked online. This was about 2013, 2014. I looked online and found this site called capital.my. I don't know if they're still around. Posted my business plan. And I'm the luckiest guy. I got a guy to invest 100,000 ringgit into the company. I grew that further, right? I grew the company further. And that's the point where I told this guy, what we're doing is not enough. We are only supplying 3 out of 20 machines or disposables that they buy. We have to provide end to end. So I had another guy that I knew who was running another company, small outfit, 2 of them, and they were supplying the 17 items that I didn't have, right? So I invited him. I said, look, I've got an investment. I can bring this far. We merged it and we ran it. And that was quite exciting. But come 2016, we had a lot of challenges, partly because GST was newly introduced. There was a new regulation called Good Distribution Practices for Medical Devices, GDPMD, sort of an ISO, which we couldn't comply with. It was too expensive. And a little bit of my complacency as well, to be honest. Now, but at that point, 2016, we already had a large base of customers. We had recurring sales in the hundreds and thousands, and margins in the business are quite high. So we got an offer to buy out. I was looking, and I got an offer, and the 3 of us reached consensus that we will let go. And my investor, who gave me that 100,000 ringgit, who became a little bit of a father figure to me, said at that point, told me this, right? I was hesitant to let go of the company. He told me, look, you are not meant to just trade devices. You are meant to go on and do bigger things, create your own things, right? And so I took that to heart, and I just let go of the company at that point. But that exit gave me enough runway to start Lapasar, this grand vision that I had, and not pay myself, right? For close to 2 years. Yeah.
And how has that experience also shaped your whole Lapasar journey, especially because you raised up, I think, 5 rounds of funding?
Yeah. I think now, so how it shaped my journey. Number one, I'm never complacent these days. I can record growth every month, increasing gross profits every month, improving unit economics, raising money. Nothing ever makes me complacent anymore. I think that's one, right? Number one. That's the biggest takeaway for me. But also I made a lot of mistakes, cheap ones in the previous journey, which I'm not saying I have not made any mistakes in Lapasar. I've made those mistakes just by sheer scale. The mistakes are bigger, but I know how to bounce back from those mistakes very quickly. And I sort of reached a place where nothing's ever enough, nothing's good enough. So if I achieve these results this month, I want better next month, I want better the next month. And that all came from that journey, honestly, because that journey was a very traditional journey. And as long as I'm making profits, that's enough, right? But here is the mindset of scale. And I know what happens to a company that stagnates. And I never want that ever for myself or for the companies that I have.
Now, Thinesh, before we leave, any words of advice that you'd like to give entrepreneurs who are watching this show?
I don't know if I'm in a position to give advice, but one thing that we are continuously striving for is the first 2 years of our journey was all about growth and nothing else. Now, moving into the 5th year of our journey, we are learning how to make scale a profitable business. And I think that's important, whether for entrepreneurs who are early on the journey or later on. I think there needs to be a clear path towards profitability. In the end of the day, that's what matters. Unit economics is all that matters. And the earlier we get into that journey of making a profitable, sustainable company, the better. So that's one that we have been super focused on in recent times. That's where we are at. That's why we're talking about turning a profit next year. So I would just like to remind people of that as we are reminding ourselves about that every day. Yeah.
Now, Thinesh, thank you very much for taking your time to be on the show. I thoroughly enjoyed the conversation.
Thank you so much for having me, Brian.
Now, I'm Brian Fernandez, and we've been speaking to Thinesh Kumar, the CEO of Lapasar, on BizTech's Startup Show. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.